is going to be a very interesting session. Again, the topic is very interesting. It's option trading. So with me, I have Shiva, Chetanji, and Vijay, all experts of options trading. So we'll start the discussion.
Thanks, Kaushik, for the invite, actually. And it's proud and honored to be part among the team. Especially Chetan and Vijay both have been like a pioneer in option buying. So it's going to be a great discussion.
Yeah. So Chetanji, my first question to you is, अभी market क्या लग रहा है? What is Nifty, Bank Nifty? आपका view क्या लग रहा है उस पे?
Okay, Kaushik, basically, have you ever been to a roller coaster?
Yeah.
In your lifetime, have you ever sat on a roller coaster up and down?
Yes. Yeah.
So current market is like a roller coaster moving up and down very quickly. So if you see in the broader context, if you see Nifty is in a range between 18,000 and 16,000. But what is happening is the pace of the rise and the pace of the fall is so quick, and quite a bit is it in gap downs and gap ups.
Right.
So what we are seeing right now, this is expected to continue with the Fed tightening, and the broader base is 16,000 to 18,000. If you ask me for this expiry, in all probabilities, we are somewhere around 17,750 to 17,000 could be the broader range. So we might trade in this wide zone, and it's quite possible that we might touch one sort of the extreme levels out there.
Okay. Right. So you are expecting this to be a very volatile month.
Absolutely.
Very volatile.
So it's a volatile month, and this week is supposed to be the monthly rollover week where positions get squared and rolled over to the next month. So you're going to see very big volatility happening from tomorrow onwards.
Right.
So you're seeing a bank Nifty lagging with Nifty along with Reliance leading the rally. And tomorrow could be a very critical day in the markets where you are at the crossroad, because today you've crossed 200 SMA. But there are resistance lined up at around 17,450, 17,650, 700. On the other hand, downside, there is a big support, 17,200, which will now act as a very big support, along with 16,950 to 17,000. The good thing, Kaushik, is we have gone below 17,000, but never closed more than 2 days below that area. And we have seen a very fast recovery there. So what you've got to be is you've got to be very nimble. You got to be watching the data, the international markets. They're also moving in wild swings as a trader. In this huge gap ups and gap downs which you are seeing, and this is a part and parcel with the tightening of rates. So you're going to see big sell-offs, selective buying, selective big sellings, and you just got to move with the flow in the market, which I think so Shiva and Vijay Bhai are masters in. They go with the flow of the market, and they are able to catch the big trends in.
Right.
So on the Bank Nifty, 37,000 and 36,000 are the wider range for this expiry. 38,000 and 36,000. And 37 is the current price in the futures. So you can expect this broad range to continue. And one of the ranges should be touched by Monday, either 38 or 36.
Okay. Right. So, Chetanji, I'll again come back to you. I have a question for you. But before that, I have one question for Shiva. So, Shiva, when we know that these are volatile markets, so what should be our trading style and the strategy? So, I mean, how to manage our trades? That's the question in the volatile markets.
Okay. I think Chetanji covered like in most of the aspect of what you're going to be expecting it in the next 1 week or so. Good thing is we are all going to be there in the face-to-face conclave next week, and the expiry is going to be happening over there. The interesting thing which can happen during the last week, whenever you see like in market behaving like this 1 or 2 weeks before the expiry, and like in the Tuesday was a crazy fall, right? Nobody know why the market fell from 70,300 to 16,850, and in the next couple of days we are back again to 70,400 odd levels. So this craziness is going to continue. When you are having this kind of a craziness, many traders, what they normally do is they like can try to make every day they would have had a fixed target of like 1,000, 2,000, or like a 1%, 2%. They might be able to achieve it. Days like Tuesday is going to completely wipe out them. The reason is what they are used to it. They are used to a pattern. What is the pattern? They will be like in buying it and then averaging it a little bit, and then like in once it goes above or like in once it stops out, they will be exiting the position. But days like Tuesday is a day wherein they will be completely blowing up their account. Why? Because they were not prepared for 400-point fall in 30 minutes. Nobody would be preparing it. What they were thinking is, Nifty has already fallen 100 points. Bank Nifty has already fallen 200 points. Let me go average. Another 100 points, they will average it again. But they wouldn't realize that their capital is completely running out and they are not even putting their stop losses. And everything is happening right in front of their eyes. Their minds get frozen. This is all the newbie traders wherein they will be completely getting wiped out. I normally say the people like, and if they are not comfortable when the VIX is above like in 17, 18 levels, try to stay away from the market. Usually when the VIX shoots up above 18 to 25, 30 at odd levels, you will see this intraday volatility. It is going to be there. You will see 100-point move in the next one candle, and then the following candle will have like a 200-point downfall. That's the way the big money is going to operate. They don't want to like everybody make money. They just wanted people who can withstand like whatever the risk that they are able to take. Only those people will be able to absorb it. But trust me, if you're an options trader, if you have made money in the morning, try to stay light in the second half. Don't think that just because the market is open between 9:15 to 3:30, you needed to be trading at every single candle. That approach has to change, because many people think I'm a full-time trader now. I needed to keep trading the whole day. That's not the goal. You should have a fixed target, achieve the target, and get out of it. No matter whether it is in a profit or in a loss, stay out of the market.
Right. And I've been following you on Twitter, so I saw that you were trading just first 5 minutes, 10 minutes, I guess. That's your style, I guess, now.
Kaushik, like the opening trade is my favorite actually. So what I normally do is I will go with the trend. What I do, I decode the data end of the day and then see how the things have closed today. Say, for example, today, if you have looked at the Bank Nifty, it has closed right at the top. It has almost literally closing it at the day's high. Provided tomorrow, if you are getting like good move from the Dow futures and the Dow market tonight, and looking at the way the block deal has been done in the HDFC Bank, and HDFC Bank was the one which was lagging, and now it has started to lead. Imagine tomorrow, if this guy is going to give you like in a pre-market open wherein the HDFC Bank is leading, then obviously I will definitely go for one round of buying in the morning. But the most important thing is, you needed to know what is the risk which you wanted to take. I normally take 10 to 20% of my capital in the morning trade and use my previous day profit as my capital, like in a stop loss, and then exit out of it. But most important thing is, morning trades, many people think that, Shiva, you are able to enter and exit. But it's the speed and execution also plays a role. You needed to be comfortable with the trading platform, which is giving you the result, wherein you are able to enter at will and exit at will. Those are the things which is necessary as well, Kaushik.
Right. So, विजय, I have a question for you because विजय, आपको तो मैंने ट्रेड करते वक्त भी देखा है. आपने एक वेबिनार किया था ELM के साथ मोमेंटम ट्रेडिंग पे, मैंने वो देखा था आपको लाइव ट्रेड करते हुए. सो मुझे लग रहा है आज का दिन आपका बहुत बढ़िया रहा होगा because this is your kind of market.
Today was a little difficult in the first half, I would say, because the move was quite erratic. So I was in the loss in the first half. But then second half, once we got a breakout above the 200 EMA on the 5-minute chart, that is when we were able to recover the loss and then end the day in good positive as well.
Right. So, Vijay, what would be your style of trading? Because आपके साथ तो हमने एक Twitter space किया था where we discussed momentum trading. So in this market structure,
yeah. So I would say I have two types of trading styles. One is scalping. Obviously, I have learned from Shiva a lot. Scalping I use when if you watch on the shorter time frame, when the moving averages are coming closer, that is when I am going into scalping. And when the moving averages are expanding on either side, let's say on the upside or maybe on the downside, that is when I go with the flow and that is when I go with the momentum. So I merge both these styles together. So that helps me a lot when, let's say, if it's a trending market, I can capture 100, 200 points also. But if it's not, if it's going to be a sideways market, then I can, take 10, 20 points, 30 points, 50 points and get out of the trade.
राइट.
Yeah.
सो चेतन जी, एक इंटरेस्टिंग सवाल मेरा है आपके लिए. जब हम रेंज की बात कर रहे थे, when we were speaking about the broader range, जो आपने मुझे निफ्टी एंड बैंक निफ्टी का बताया, and I know that you trade straddle and strangle. So what will be your approach in this kind of market? क्योंकि आपने एक
Yeah.
broader range identify कर लिया.
See, yeah, Kaushik. So basically, what I specialize in is we do modified Bank Nifty and Nifty short straddle and strangles, where I've designed some edges on the basis of, as Shiva said yesterday, is what was the momentum in the last 1 hour, whether you are expecting a range or whether you're expecting a movement. So we are in that monthly expiry. So
Right.
probably a short straddle or a strangle intraday. Probably if you see the premiums today, the short straddle premium is in Nifty is about 320 odd points, and Bank Nifty could be 870, 860, which is on the lower side compared
Right.
to the other monthly expiries. So in all probabilities, what I'm expecting is I'm expecting a bigger move this particular week. So this modified short straddle or strangle is where one of my leg gets triggered and I hold the other one with a stop loss. So it becomes directional after a big move which is happening in the markets. So it's if I go by the drawdowns, probably we have come to an area where there has been a lot of choppiness in the intraday movement, especially in the first half.
Right.
And probably I'm looking for some big moves in this particular expiry. So that's my bread and butter trade, which I do for intraday. I do modified short straddle and strangles, which I call it the golden bank nifty and nifty. So I'm
Right.
more of an option seller, less of an option buyer on the intraday
Right.
basis.
Right.
So that's what I'm going to do it in Goa, and I'm going to show what are the things we can do, where to make a strangle and where to make a straddle.
Right. And this is your topic for the conclave as well. So I'm looking forward to your session.
Right. So I'm not taking a session. I'll be there on the live trading.
Yeah.
So probably I'll be discussing that in the live trades itself.
Right. So Chetan ji, I have one more question. That when the ranges are big, which is the kind of strategy we deploy, and when the range is small and we are about to break out,
Right.
right? So what should be our lookout when we are trading options? Because options are very critical instrument to trade. Either you make good amount of money, or it has potential to wipe out your capital also.
Correct. So basically,
Right.
Kaushik, at the wide end of the range, it's always better to be a contrarian if you are a positional option trader. So you see, if you see Kaushik, when you were at say 18,100, 200, it's always better to be a contrarian trader and bet that the prices are going to fall rather than give a breakout at the top end of the range. Why? Because you have to understand, if the market is moving very quickly from the bottom to the top, or from the top to the bottom, you see, before the breakout, there needs to be some sort of consolidation in forming of a base, which as of now we don't see. We see a very selective buying and a selective selling, which is a typical sign of a range market. If you see Reliance, it's broken to 52-week highs. And on the other hand, you have stocks like Infosys, which are below critical levels of 6-9 months low. So this is what we call it a classical sign of a range market, where in the top 10 stocks, if you break out, you will see 2 to 3 are really very bullish, 2 to 3 are really very bearish, 2, 3 are in a range. So if you're taking a broader range, it's always better to be a contrarian until unless it's not forming a base. It's always better to be there and not predict a breakout. For a breakout to predict, probably you need a long consolidation in and around the top end or the bottom end of the range, which we are not right now. Secondly, the shorter range which you are in right now, again, find the range high of the shorter range, range low of the shorter range. See how is it doing in the next 1 or 2 days. If it is not breaking out, play the contrarian game. If it is holding at the support of the range highs or the range taking a resistance of the range low, play a directional trade in that side as a positional trader.
Okay. So, and what is your method of identifying that range? So it's normal support resistance, or it's a different mechanism?
Okay, so basically in the normal support, what you look is is you look for some momentum based selling or buying in that particular area. So if in a normal range you are seeing a momentum based selling at the range highs, you know that the seller is activated there. And in on particular, you will see when it touches the range high or the range low, you might see the opposite side gap down or a gap up in the next 1 or 2 sessions, which tells you that that area was actually used for stop loss hunting, trigger of the position of the previous players, and now they have reversed back the trade. Right. So range highs, range lows are generally used as stop loss hunting processes because that is where retail put in their stop losses. Right. So probably you might see Kaushik for quite some time this range to be respected in the markets. Okay. So it could be months before this range gets broken out.
Right. So Shiva, I have a question for you. That do you identify a range? So or it's basically the candle theory that you use? Shiva, are you there? Okay. So Vijay, I'll ask this question to you.
Sure. Yeah.
I have seen you that you trade momentum, so you need a move before it comes, right?
Right.
You want to be in the move, right? So when you know that the markets are in range, so what's your trading style during this period?
Yeah. So as you were discussing with Chetan Bhai also, that when market is in a range, okay, I have what I do is this is how I prepare myself for trading. I will set up a range which is like in a lower band, wherein you can say it can be an intraday range. Like in a cricket field, we have a 30-yard circle, then we have a boundary, and then we have a 6, right? So it's the similar situation for me like that. I will set up a range wherein let's say 100 to 100 point range where it's staying inside this range. Above that, let's say we have a 300 point range, and above that there is a range expansion which goes to maybe 600 or 700 also. So this is how I calculate my playing field for the day, and I see that in which kind of range it is. So if it's in the 30-yard circle, I will play like 20-20. We take it single runs like 10 points, 20 points, 30 points, and get out of the trade. But once you see momentum, once it is going out of the 30-yard range, then you know that the next destination is going to be towards the boundary, right? So there you can take a trade which you can have for 50 points, 70 points, or maybe 100 points also. And then the out of the boundary is where you just hold on to the trade maybe from 11 in the afternoon and just take it till 3 p.m. or 3:30 also.
Right.
Yeah.
So, Shiva, I have a question for you. The question is, if you have a very shorter range, you know that Nifty is in very small range. What's your strategy? Because you are in scalper. So does that range matters, or it's a just 2 candle, 3 candle what you trade? Because you showed one of your trade during the ELM live that we did.
Like in Kaushik, if it is going to be like in a short range, say for example, 90% of the days you will be getting a zigzag mode. You're not going to be getting a trending day. Trending days normally happens like in 3 or 4 times in a month. 15% or like in 80% of the days is going to be zigzag days. When you have a zigzag day, and if you're not able to follow the 2 candle theory, then we will be using our like minor indicators such as the super trend, the PSR, and then the VWAP, and then the WMAs to help and find us a support and resistance trades. Even in these trades, what we normally do is we try to capture around 10 to 20 points or like a maximum of 30. But nowadays, even like yesterday and today, if someone would have traded, they would have easily got 50 to 100 points in like one single candle, even in the Nifty itself. So Nifty is also giving equal opportunities, but 90% of my trades will be focused more on the Bank Nifty because when I'm getting like in 10 to 20 points in Nifty, I will be able to get 40 to 50 points. And moreover, the liquidity is very much available at Bank Nifty. So if you're not comfortable with the volatility, stick to Nifty. Like in terms of like in a large moves, which you are like expecting it in a single candle. Otherwise, Bank Nifty would be the best bet if you're looking for a short-term quick scalps.
Right. So, Shiva, the follow-up question is, who should trade options?
Ideally, like any trader who would have been in the market, who would have,
Yeah.
say, for example, someone who has been there in the market for more than 5 years and who has been trading in the equity space and he has been having the portfolio, but he wanted to explore other avenues. In that scenario, yes, FNO is a good one. But I would sincerely say any new business or any like in a new project when you're going to be getting into, you needed to do a groundwork for at least 6 months. Know what is what. First of all, you needed to know FNO is not going to be like in a straight game similar to what equity. At least in equity, you can hold it. If the price goes down, you can hold it for a year, 2 or 3 or whatever the n number of years you can. But in FNO space, every like a product has an expiry. It can be a weekly expiry or a monthly expiry, and the product value, like if the like a respective strike is not going to be in the intrinsic value, then naturally it is going to go and close in the zero. So in that scenario, people needed to know all these basic nuances. Many people ask me, Shiva, like on Tuesday, what happened? Like in the move happened, but the Bank Nifty came and settled 300, 400 points higher than the last tick. The reason is the last 30-minute average traded price would be considered for the closing. So if you're not knowing about that, and many of them took a position on the put side, following day, all those guys would have got wiped out because the settle price was higher, and then the gap up happened the following day. So immediately they were short, but like in looking at that, they were like an almost lost 60% at the opening tick itself. Many people felt bad. These are the nuances which many traders miss out. So learn all these tricks and do it with one lot first. Try to do it with one lot. See whether you are able to be consistent. Either be like in a profit or a loss. Out of 20 days, if you are able to be consistent enough for 15 days, and if your loss is only for 3-4 days, then see how is your returns. Keep expectations. Keep the target as like in realistic to your capital. Once all these things align, then probably after 3 months, look at your performance, then slowly scale up. But many people, what they do is once they see the first month that they have been able to make like an astronomical returns, because it is an honeymoon period, whatever you touch, you will definitely be rewarded. But that will not be continued for a long run. So they needed to know that nuances and then experience. More the time you're going to be there in the market. It is similar to a cricket match, actually. Many people would be saying, right, more the time you spend in the grease, you will be able to score better because you will be able to see the ball better. Similar way in the market. More the time you're going to be there in the market, observing it, you will definitely get a lot better. You will know how the patterns work out. You may not be able to trade the same way how you're trading on Friday to Thursday. Friday is going to be a different way of trading, and Thursday, if it is going to be an expiry day, you needed to trade differently. Each and every day has its own attributes. So learn all these minor nuances and then get into the game of like an FNO or in the options market.
Right. And what is the capital that one should have when they're trading options? Because I'll ask this question from a options buyer perspective. What's the capital should be deployed?
Yeah, from a buyer's perspective, if someone who's new, I would sincerely say start with like in 50,000 to 1 lakh. Start with one lot. Never ever deploy just because you have 1 lakh in your account. That doesn't mean you needed to deploy 1 lakh and all your money in the trade. No. Use only 20 to 30% of your capital in any given trade. Use the remaining capital for a backup. Usually, like in sometimes our first trade might go long. Then we needed to book a loss. Ready to book a loss, accept it. And if the setup is working right the next time, then go and take a trade. But if you're going to be deploying your entire capital in the first trade, and you will be feeling that somehow I needed to get the trade into positive, let me hold. They are not going to be worried about the stop loss. They are just going to be thinking about my position is like in 20% down, 30% down. Somehow I needed to get it back. But imagine you have only deployed 20% of your capital and you are sticking with a plan. I'm going to be like looking at a stop loss of 1% or 2%, and then I'm booking it. And then if my setup works out next time, I will go and take a trade. So always they needed to follow certain protocols and they just needed to follow it with discipline. Discipline and attitude and psychology plays a major role more than having in capital and other things. Most of the traders, what they do is first day, they bring in 1 lakh, see like in making 10,000, 2-3 days, they make 10,000 consistently. The following day, they bring in 10 lakhs, thinking that if I'm able to make 10,000 with 1 lakh, I can easily make 1 lakh with 10 lakhs. So, but that's not going to be an easy way to do it because market patterns changes and you are not equipped immediately to handle the what to say, as an option buyer, we have in certain limitations. We may not be able to play the same way the sellers are doing it because sellers are the ones who are creating the position. So obviously, as buyer, we have limitations. You needed to understand if seller is offering it to you, he doesn't want it to go into a loss. So put that in mind. Then what you needed to do, understand the game, how they have been playing it. Say, for example, as a seller, if someone's selling it to me, I needed to be smart enough to know where to enter, where to buy. In case if there is going to be like an IV levels are going to be pretty high on a particular day, when I know that like if it is going to be on Tuesday or Wednesday afternoon, if the IV levels are going to be pretty high, naturally I don't want to buy it because I know the theta is going to be coming into the picture. With 1 day to go for the expiry, you will see the premium decay happening in the Wednesday afternoon. Don't be a buyer at that time because you needed to be smart. Unless and until you see a smart move happening in the futures, don't go and venture out yourself as an option buyer. So these are the things these guys have to be looking at as an option buyer. But yes, you can start with a small capital, even with 1 lakh. But the bigger problem is whether you will be able to maintain the discipline even with this 1 lot. Many people ask me, Shiva, just because I have a small capital, I'm not able to make profits like others. Guys, it's not about a small capital or large capital. Whether it is small capital or large capital, the risk is going to be the same. If you are not able to able to maintain your risk with a small capital, you are not going to be able to make the returns with a large capital as well. So that thinking has to be changing there. And if they are able to do that, I think everybody should be able to do the option buying as well.
Right. And I could relate with you because there was one point when I used to do option scalpings and I used to trade in Nifty and I used to trade 100 lots of Nifty. So I started with 1 lakh capital and started increasing the capital as in when with the experience. So I started trading with 100 lots of Nifty and I could figure out that when you trade with a smaller capital and when you trade with a bigger capital, there are different challenges. You cannot do scalping with 100 lots because the free size of Nifty is 1800. So you have to punch orders for every 1800 quantity.
Exactly.
Right. So that's a different challenge which I did not take into account when I was strategizing and scaling up. And then that was the major reason I shifted from buying options to selling options, because to maintain that capital and then still be in the game, I guess you evolve as a trader.
Absolutely, Kaushik. And one point as an buyer, yes, scalability will be an issue. Many people say when you're doing a manual trading in terms of option buying, yes, scalability will be an issue unless and until you have an algo running for you. But as you said, as the an NSE or an exchanges introduce the new rules in terms of the Bank Nifty coming down from 2,400 to 2,200 and Nifty from 4,500 to almost 1,800 now. In terms of the lot size, yes, for a manual trader like us, it is going to be a problem. But if we are managing it with an algo, then it should not be a problem for 100 or 200 lots. But yeah, you and me know it how the scalping works, so it's a different ball game altogether.
Yeah. Right. So Chetanji, my next question is for you, that you have been a seller, option seller. So what's the kind of capital that one should look at and when one should enter into option selling? Pehle ek to prerequisite ki what is the kind of knowledge you should have to trade options and when you should decide to sell options and what's the ideal capital that you should have to trade options.
So since you are talking about cricket, let me take you to the world of cricket. So option buying, if I would say, is synonymous with 2020 and options selling is synonymous with test cricket. Test cricket is all about batting, taking the shine out of the ball, new ball, and then, as the time passes by, you start scoring runs as the sun is out. Similarly, the writer makes money when he is in the trade for the time where he is surviving. So the writer needs the time to be in his favor, which is exactly opposite for that of a buyer. So the first important thing is it's a lot easier than buying. Let's be honest. Why? Because the theta is in your favor. Only thing is you need to manage the delta part of it. And if you are a weekly option seller, IV part comes into the play on Friday and Monday, but from Tuesday evening, it's all a fight between delta and theta. So what's the important thing is if you've got the range right, the trend right, if you're expecting the ranges as Vijay Bhai said that 30 yards, if you cross, you come to 60 or 80 and then it's a 6. So the writer has to be very cautious when it starts moving outside the 30 yards. So where Vijay Bhai gets active, the writer has to be cautious in squaring off his position because he knows now the move is happening on the other side. So till it is in that 30-40 yards, 1 or 2 runs, the writer is absolutely fine. So I'll just give a small example for our viewers today. Today morning, Bank Nifty probably opened at 36,460, 500, right? And as Shiva said that there was a trending move which happened at the later part of the day. Yesterday evening, 37,000 strike price call closed at 27 rupees. Today, despite Bank Nifty opening and moving up by 100 odd points in the morning in the first 7 minutes, the 37,000 call never crossed 27 after the first 5 minutes. It was about 26, 27, 28. And after that, despite Bank Nifty going up, the 37,000 call was always having a lower high and a lower low.
Right.
And in the last 1 hour, even when there was a very strong buying when it looked like Bank Nifty could break out, it did not break the high of 10 rupees. So this is the power of theta on that last day.
Right.
So in a directional up move where Bank Nifty has gone up by 400 odd points on a Thursday, if this move would have happened early in the morning, in all probabilities it would have crossed 40, 50, 60 rupees.
Right.
But since it took out the time and the move happened in the later part of the day and in the last 1 hour, the impact of theta was so powerful that the delta impact was neutralized. So as a writer, this was the day you look forward to. Why? Because if you are in the outside 0.2, 0.25 delta range in the call and the put side, that is where you can basically make money as a strangle writer.
Right.
So the capital here, let me complete. The capital here is, if you see the NSE guidelines, basically if you're doing a pair of a straddle or a strangle, in Bank Nifty is close to 1.82 lakh rupees and Nifty is close to 1.1 to 1.2, somewhere around that. Some brokers charge more or less.
Right.
So if you're doing say 5 lots of Bank Nifty, say even at different times or at any given point of time, your capital should be close to 10 lakh rupees.
Okay.
And if you're doing 5 lots of Nifty, probably 6 to 6.5 lakh rupees. So it's an expensive game. What is more important here? What is the buzzword? Important thing, I must have my exit planned. This is where I'm going to get out. So if an event like Tuesday happens, no matter what, your exit should have been planned.
Right.
So before it comes to a loss, a big loss, which is unbearable, you have to be ready with your plan. This is where I exit if it goes wrong. This is what I can lose.
Right.
So 65% of the times, you have a probability of making money as a writer. Yeah,
And for option selling also, you have a stop loss in place.
You have to have for any trade in the market, whether you are a seller or a buyer, because you see, if you don't have a stop loss, you are signing a death warrant. As Shiva said, that 600 points in 20 minutes, I'll just give you a small example. 36,700 put on Tuesday at 2 o'clock made a low of 95 rupees. And Kaushik at 3:30, the price it closed was at 717. I'm probably making a high of 800.
Right.
So probably if you did not have a stop loss and you had sold that, probably you wiped out your capital.
Right.
So anything without a stop loss, you are signing your death warrant.
Right. Exactly. So for all our listeners, I want to share that Chetan Bhai, Shiva and Vijay has recorded a webinar with us at ElearnMarkets, and they have shared amazing knowledge on options trading and their style. So I'll encourage, if you're interested in learning from them, you should definitely go and watch their webinars. So those are amazing, and they will give you a different perspective, because when I saw all of their webinars, I got a different perspective to trading. So every trader will teach you something, and these are experts of options trading. I've not met any better option trader than them. So I'll highly encourage you that you follow them on Twitter. You watch their webinars. We have their webinars on ElearnMarket platform. That will help you a lot. So Vijay, I have a question for you. That and then this question is for everybody. That when you are a trader, when do you decide? Because I have seen a lot of questions that comes to us at ElearnMarket that we want to become options trader. Their only idea is to become options trader, right? And they don't have any prior knowledge about markets. Their only idea is I want to trade options. So when do you recommend somebody to trade options? So what's the minimum benchmark that one should have that इतना तो ज्ञान लेकर आओ और फिर option करो? Right. Okay. So what do you recommend? Sir, I want all of your take on this. So I'll start with Vijay. Yeah.
Sure. So Kaushik, I give this example quite often to all the students that we have. What I say is that let's say we go through a process in our life also. For example, we pass out 10th standard, then we go to 12th standard, then when we become a graduate, and then we look for a job, right? And then we start earning, isn't it? Right. So I would say option buying or option trading or trading in particular. What we should be as traders is, I mean, obviously after learning a lot, this is the idea that we get. But for people coming new and, obviously 2020, after that, a lot of traders have come into markets. What I would suggest is focus more on learning, observations, focus more on behavior first. Okay, because market is like a friend that we have, a close friend that we have. It has a particular behavior, right? And understanding that behavior or understanding the market takes a few years. At least 2 to 3 years we should spend, not expecting profit, but expecting to learn and expecting to observe things and understand all the nuances about the market first. So be a graduate first, then look out for the profits, or then look out for the money that we want out of the markets. But first we have to invest our time, we have to invest our money into learning. So at least give a couple of years first, then slowly and gradually you can go into the market. The only problem what happens is we as humans, we go a lot into greed and looking maybe at the M2Ms. People want to copy that and get to that position maybe in a 6 months period or a year period. That is the approach, that is what we can say has hampered like 99% of the traders, that we focus more on the M2M, or we focus more on the money part rather than trying to understand how this person came to this level or what all things he did to come to this level.
Right. So Shiva, what's your take on this?
I think Vijay has covered most of the elements, but what I would additionally add is, say for example, if you're thinking to come into the markets, first and foremost, you should be bringing in money that you think that you can afford to lose. That means you have some excess fund, especially in trading. At least in investing, you can think about some passive income and other thing, but trading is going to be like in a speculation game. So when you are getting into a speculation, then obviously any money that you're going to be bringing in, you needed to ready to afford to lose it. And the most important thing, don't love your position, whatever may be it, you needed to ready to and forego it. Say for example, if it is a profit or a loss, there are traders who have seen best days and the worst days. Even on the best days, they would be a little greedy, thinking that why don't I hold my position for another 10 more minutes? I might get another 1 lakh more. In that, in a sense, probably you might get a bad news at that particular moment, and then you will see the M2M swinging from 10 lakh profit to 15 lakh loss. Because of your little bit of greediness, and some of us have an habit of squaring off the position when it is going to be a round off figure, because even we are not satisfied with 9k or 10k or 90,000 profit. We wanted to close it to 1 lakh profit if possible. So those are the little elements. Don't get attached to the profit, don't get attached to the positions which you hold. Try to take it at one day at a time. And the most important thing is focus on learning. You will definitely get to see a lot of new things with the YouTube, with the ElearnMarkets. So many webinars being conducted and so many nice panel of experts who have been sharing their knowledge. Choose the right one which suits you. Not necessarily just because every bit of an information is available, you wanted to try everything. See what suits your personality and stick to it. Chetan ji is good at selling. Then you should be like, you need to know how his experience is playing out. What are the things which he is looking at as a selling? I'm a 2020 player. I just wanted to go open it with a whack in the morning and then like can get out of the trades, no trades for remainder of the day. That's the way I set my tone. So each and every individual has their own unique capabilities. Understand your personality and stick to what you are able to do with.
Right. So, thank you, Shiva. So, Chetanji, I want to take the liberty and add one more component to this question. That what's the method of exploring whether they want to become option seller or option buyer? Right, because that's a very difficult situation that you listen to everybody, you learn a lot of things, right? And then you are confused whether you want to be an option buyer or seller. Then how to identify one? That what should be the process and what should be the prerequisite?
Is that for me?
Yeah,
Perfect.
Chetan ji. Yeah.
Yeah, yeah. So important thing, first of all, before you be a buyer or before you be a seller, the first part is Vijay Bhai said, theoretical basic knowledge
Hmm.
about what are options, how they behave. Second part is he said if you are to gain certain experiences, as Shiva Bhai said, that there is one is a trending day where you just, if you're a scalper, you just get in to book out some, wait for a small correction in the direction of the trend.
Hmm.
And there are some other days where you know in a trading day you get one or two spikes.
Right.
So the second part of the equation here is once you've got this basic knowledge comes the power
Hmm.
of observation.
Hmm.
You're observing the markets.
Hmm.
How are they behaving?
Right.
How are the markets behaving? As Shiva Bhai said that in the monthly expiry you have a different way to approach. The volatilities are much more,
Hmm.
and you need to be more focused.
Right.
So how is it behaving? So you do that from observation, and the best way to do is trade. Maybe
Hmm.
one lot, as he rightly said.
Hmm.
So once you are trading, you have a lot of experiences, psychological experiences, trading experiences. You
Hmm.
are seeing what are the things you're doing, what are the mistakes you're making. You need to iron that out.
Right.
And then, you know, if you've tried out option selling for 6 months, you've tried something in option buying for 6 months,
Hmm.
then it's the time to basically again refresh yourself, catch
Hmm.
up with the experts, see what they are doing, what can you differ in a different mindset,
Hmm.
and then slowly increase your lot size. Then decide after a year whether you want to
Hmm.
be a buyer or a seller. What is your psychology suiting you?
Right.
And then give yourself some time, 6 months to 1 year, trying that. If you
Hmm.
say, I want to be a buyer, give yourself 6 months to a year, see the improvement you are doing. So,
Hmm.
as Vijay Bhai rightly said, the first 18 months, your survival is to be a break even trader.
Right.
So, your USP should be that you are here to gain experience. So you know how to exit. Secondly, as the greed and the fear factor balancing needs to be done very
Hmm.
quickly if you are an option buyer or a scalper.
Hmm.
So that's where you need to focus if you are as a scalper. If you're not a scalper and you're a positional option buyer, that's fine. You must know how to identify those points where you can get bigger moves into the market. So
Right.
once you're done with those basic knowledge and experience, after a period
Hmm.
of 18 months to 2 years, you'll be in a fairly good position to judge what you want to do.
Right.
So that is what I advise my students. That's the best way to take it forward. But just start trading. That's important. One lot, start trading.
Hmm.
Start managing your emotions. That's the important
Right.
part.
Right. So I'll
Kaushik,
take. Yeah.
Kaushik, sorry, like, and just to add what
Hmm.
Chetan ji said, yeah, he brought a very, very valid point. Trade.
Hmm.
Don't
Hmm.
do paper trading. Do actual trading because your human emotions needed to come out. Because many people say, Shiva, I will be doing very good in paper trading, but when it comes to actual trading, I lose out. Because your
Hmm.
human emotions needed to be like in coming into the picture, and that is very
Hmm.
key.
Right. Right. So my last question to the panel today, uh, a quick question. that what are the 2-3 key ingredients to become a profitable trader when you're trading options? Just 2 points. We'll do it rapid fire question. So we'll
I would
start with you, Shiva.
I would sincerely say like and have a positive attitude and never give up,
Yeah.
because
Okay.
experience being there in the market, and you can take me as an example because like and I would have failed 1,000 times, like in between 2007 to 2015 I would have literally blown my account n number of times. I don't have an count itself, but perseverance and being there, if someone is able to do it, why can't I? If you are able to
Right.
have that attitude, I think definitely one day you will see the success as well.
Right. So
Yeah.
Chetanji.
Yeah. So if you were to ask me, my first answer is process.
Hmm.
That's the most important. What is my process? Because I think without a process in the market, you're bound to be a failure. So the first and the most important thing, what is the process? Point number two, what is my edge?
Hmm.
So you need to define both of them. So once you've defined your edge, the process is your roadmap to reach there. So
Right.
without a process, you can never be successful in the market.
Okay.
Without the
Vijay.
edge, not possible.
Yeah. Yeah.
Thank you.
Yeah, I for me, most important what I've learned over the years from Shiva and all the other traders is the first and foremost is managing your risk. That is risk management, which occupies, I would say, 60-70% of an option trader. Might be a buyer, might be a seller, but risk management is like the most core that I feel is very, very important. And other than that, understanding the price behavior. Give
Hmm.
yourself the time to understand the price behavior. These
Right.
are two very, very important points.
Right. So thank you, Vijay. So for all our listeners, I guess we had a very amazing session. Lastly, thank you so much, Shiva, Chetan Bhai, and Vijay for accepting our request to do this Twitter space.
Thank you,
Thanks,
My
Kaushik.
thanks,
pleasure.
Kaushik,
Thank you
and
so
looking
Thank
much.
you,
forward to
Learn
meet you
Markets
all
for inviting.
next week.
Yeah.
Thank you, Shiva
Yeah.
Bhai. Thank you, Vijay Bhai.
Thanks, thanks,
Thank you,
Bye.
Chetan
Chetanji
bhai.
and Vijay. Bye.
Thanks, Shiva.
Take care.
Yeah.
Good night.
Yeah.
Thanks,
Yeah.
Kaushik.
Bye.
Thank,
Thank you.
yeah.
Bye.
Thank you.